Yep.
Okay. Hi, guys. Welcome to the webinar. My name is Mark Shawson. I'll be starting in just a moment. I'll give everybody a chance to get settled, and then we can get cracking. Hopefully, you guys had a good trading week. Maybe you guys can tell me before we start if you've been able to apply, any of the thoughts or the techniques to trading. Good, bad, or indifferent. If you've had any successes or failures, maybe we can talk about that before the webinar. So if anybody wants to share their experience, that would be great. Come on, nobody's coming forward. Anybody want to share their trading experience this week if they've been able to? So Graham says, I lost on Beyond. So Michael says, I'm brand new and I've never placed a trade. I really want to get into trading though, and I'm willing to do what it takes to learn. Okay, that's fair enough. Yeah, I kind of threw the question out as to if anybody's used any of these trading methodologies to apply to their own trading in the markets, whatever it is, gold, commodities. So Ken says, I've lost on pound US dollar. I'm winning on Australian US dollar. Okay. Yeah, we talked about the Australian US. It's I told you guys to buy it yesterday. It kind of went up today. Simon says, I saw a key reversal on the daily in gold and I went long. So good on you. Yeah, gold's at a very interesting, very pivotal place on the charts. We talked a little bit about that. All right, so Emmanuel says, I earned some money shorting US dollar CAD using your methodology. Good on you. Yeah, I was shorting the dollar CAD today also. But Dirk says, I applied your knowledge on Boeing and OCGN. Yeah, so I bought OCGN a couple of days ago, and it kind of took off today. It's one of these things where I'm banking on some momentum. Vivian says, I followed and bought the Australian US dollar. I woke up and I'm up $700. So fantastic. So yes, for the last couple of days, we've been talking about just using price. To me, the markets are a discounting mechanism. The markets are ahead of whatever the news is, whatever the projected price path is. The markets kind of start laying out trends. They're laying out price patterns. They lay out price action that actually points in the direction that the markets want to go. And that's basically all I look at. I don't trade the news. To me, the market is the news. So welcome to today's webinar. It's the last of a 4-day live trade execution webinar series. My name, again, is Mark Shawson, the pattern trader. Today, I did a bunch of things, but I ended up with positions. I shorted Goldman Sachs on the close. They've got earnings tomorrow. And sometimes I play these earnings and use the technical things to see if I can guess which way the earnings are going to push the market. So I shorted the market. Maybe not the best play. We'll see tomorrow morning if that works out. I'm long a whole bunch of OCGN, this little small stock. I actually bought more, which actually lowered my, or raised my average cost. I'm actually making more in my initial positions. And then I've been trading these JD calls. Yesterday I was in the 80 calls, made a whole bunch of money this morning, got out, waited for a break. I rebought them on the close. And you can see I've got a whole day for these things to work out. So that means they expire tomorrow. So that's why I kind of bought in the money. So JD closed at about 81. So I have about $1 of pure premium in there, and then the 25 cents over that to play whatever happens tomorrow. But based on the way it closed, I it's a real gamble, because if it doesn't work out, I could lose most of all of my money in just a day. These are my FX positions. I actually bought Australian late. My my signal was to buy this around the high 73s, and I forgot after the webinar to buy it. So I ended up buying it this morning late. Our members got in a lot earlier based on this signal when we were talking about it yesterday. And then I've been long for a bunch of time, about a week now, in dollar yen and pound yen, and making some nice coin there. And we talked about those. So just to kind of refresh your memory on the charts, what we talked about yesterday was this stock JD.com. This was actually an email that I sent out over the weekend. So if you're on my list, you would have been long from Sunday on JD.com. So this is the list, kind of what my email looks like, on the weekends, kind of give you a view of what the dollar index, and I kind of got my analysis on the charts. And I told our members to buy dollar yen at 112.30. I think it's trading about 112.60 or 80, 113.60 or 80, so about 150 pips higher above that. And then the neat thing about these orders is I had a pending order to sell gold at 1757. And so I used the market to confirm my analysis. And the great thing is gold went higher, but it never triggered my sell stop. So I was wrong, but I didn't get hurt. So I kind of use a layered approach where I look at the pattern, I look at the, the bar. There was a reversal there. I basically said put a sell stop under that green arrow at 1747, and it was never triggered this week. But then I also had a buy stop in JD.com at 79.11, and today we closed at 81.03 or something, so $2 higher. Not a big move, but that's what it looks like. So this is what I was looking at all this week. When I started talking about JD at the beginning of the week, I said this thing's likely to go higher, and it's been climbing a wall of worry. And again, there's a lot of noise. What's the Chinese government going to do? What's the Fed going to do? And so all I do is look at patterns on the chart. And to me, there's a very classic Adam and Eve double bottom. It's really just a double bottom, but to be really technical, an Eve is where you have multiple attempts at one support level, and an Adam is when you have a single. But the whole thing is basically just a classic W-shaped bottom. So it looks like a W or a double bottom. And you can see it crossed the neckline, effectively confirming this pattern. And then, what prices typically do, everybody gets excited as they burst out, and then they usually do a retest. Some pullbacks can be bigger than others. This basically, pull back and then cross that neckline again, that 75. And so once I kind of understand the pattern and the implications of a pattern, so by definition, a double bottom is a bottom. That means the market has bottomed. So if a market has bottomed, what is it going to do? It can only do one thing. It can only go higher over time. How it gets there, I mean, it can be noisy, it can do, anything it wants. But once I kind of understand, so this is my cheat sheet, my trading for dummies. Once I kind of understand what the market is telling me, then all this noise, you can see today it opened higher, went lower, and then eventually, so this gives me the confidence. People say, well, how do you hold these trades for so long? Once I understand the pattern, then I just try and get in sync. And frankly, if this thing started coming off again, I would just buy more. If it comes back and then does one of these, I'm just going to, keep buying at these things, because basically once the market is bottomed, it's going to find a way to go higher. And, how much higher, when it's going to do it, those are the unknowns. And so I kind of use certain price action to tell me when to get in sync with the trade. So today we have what's called a key reversal. where during the day it made a low. By the end of the day, it closed firmly on the high of the day, and the buyers were in control in a market that has got a buy pattern and is in a buy trend now, a long trend. So I use a combination of these techniques to get in sync with the market. This also, if you want to be really technical, is an inverted head and shoulders, an upside down head and shoulders price pattern. And so the neckline of this is probably right around where we are now. So we closed just above, we're right at this neckline. So now it just looks like clear skies above here. This whole thing is a basing pattern. This whole thing is like a foundation for a building. And I always say the bigger the base, the more into space. So this thing looks like a launching pad for a big move. And so this is what and it doesn't matter what this chart is. I don't care if it's pork bellies, natural gas, corn, patterns and price action constitute the same implications. So Vivian says, where do you enter? So once I kind of understand, okay, if you're not in this trade, now you're dissecting the trade, you're looking at the patterns and you're saying, okay, and so I wait for a particular day. And so this is what I call my insurance day bar, because today these guys showed me where the risk is. They try to push it lower and then, couldn't take it lower. So now I understand where to, first off, I understand which way I should be facing. I need to be headed north. This thing is going higher. So now I conclude that I want to be long this thing. I want to buy this thing. I wait for a day like this, a shakeout day, an inside bar day like here, or a key reversal day, where it tells me how to get in sync. So just like gold, I don't just look at this thing and just buy. I bought the options at the close, so I should say I did buy. I had a strong feeling. But typically what I like to do is put a buy stop above the high of the day. So today's high was about 81.30. And you can see we closed at 81.03. We're slightly higher in the aftermarket session. So the markets do trade after the market. And I trade in the pre-market and aftermarket. I actually bought more OCGN in the night session right now. And so once I kind of analyze my setup, I would buy it at 81.35 on a stop, let's say outside the high. And then I would simply put my stop loss right there, which was the low was 78.83. So basically my math is terrible. You have what, $2.50 risk? $2.50 risk for maybe a $20 upside. So you've got, this is your risk, and that could be your reward. So this is how, I look at setups where I try and find a justifiable risk for an outcome that is going to be at least 3 times bigger. So if my risk is $2.50, then I would look to make, at least $7 on this trade to 88. And I think that that is very doable. That's where the first level of resistance would be, right around there. But frankly, I think once this thing gets going, it's going to go a lot higher. So, then I would just put an arbitrary take profit somewhere up here. And then if the market starts looking like it's going in the direction I anticipate, then I'll keep moving my take profit. I anticipate this thing is going to go a lot higher. So, I'm not going to stop it from making me more money. And I would actually look to add to my positions along the way. So if we bumped into a resistance up here and bumped off here, instead of selling, I would look to buy more, as I think it will relaunch higher. So Duncan says, how do we buy in the aftermarkets? It's most brokers, certainly in the US, have aftermarket extended market session hours. And the market is actively trading right now. You can see the Qs are, the QQQs are up 60 points above where it closed, and it closed very strongly. So you can actively trade these markets in the aftermarket. Yannick says, could you explain a sell stop and a buy stop? How? So I'm not going to go into it. It's just a pending order, right? It's just, so you put an order that's just pending. It's called a buy stop, and you can Google it and what have you. I'm not going to get into mechanics of how to enter an order. If you don't know how to do that, then, you know, talk to your broker or, you know, look it up. But it's basically a pending or resting order, where you're just putting an order to buy at 81.35. And if tomorrow the market goes straight down, you're not put into the market. So I like the market to confirm my analysis. So I have a 4-step layered plan. First off, I, you know, look at what is the trend or the environment, the phase or the condition. So this thing looks like it's heading up. Is there a pattern? Here is a double bottom, inverted head and shoulders. So once I understand now I've got these bullish price patterns and I want to buy it, then I find what I call this key reversal, made a new low, close on the high, and then I put a buy stop. So it's a 4-step process that gets you closer and closer to the bullseye of a high value trade. Now, whether you win or lose on this doesn't really matter, because if you do this well enough times, you know, if you're able to risk $2.50, so, you know, this is your risk. And, you know, if you can make $20 out of this, or 10, then you can make 3, 4, 5 to 1, you know, risk versus reward. And this way you don't have to win every trade. But here's the thing, this is a daily bar. So I have to wait an entire day to see how this thing closes. So to me, you'll notice I don't use candlesticks, because I want to see how this thing closes. Where does it close relative to the high and low? And you can see this was a relatively big bar. So the bigger the bar, the more confidence I have in that, because this really try to push this down, find out where those things are. And so it's very unlikely tomorrow, if I get long here, that, you know, we're going to see, you know, something like this where the market just takes that low out. So now, at least for tomorrow, I can kind of get a peek at this thing, you know, get a trade in, understand where my risk is. And, you know, it may just mess around, but if I'm not stopped out, this thing will eventually get going. There is some resistance in here, but this is how to, you know, get in sync with big trades in the market. So Keith says, I'm a little nervous about buying into supply. Those are just words that you're using. Yes, there is this thing here, but this is the bigger pattern. So again, you don't have to be perfect, you know. So if you try and analyze everything, you know, where's their supply, where's this, you know, you'll get, you know, paralysis, you know, analysis by paralysis. So the thing is, you don't have to be perfect. You know, perfect is the enemy of the good. This is my risk parameters. And even if I'm wrong, even if it kind of comes here, gets going, and I get snagged, if you put, you know, a 0.5% risk or 1% risk, you know, for, you know, $2.50, I guarantee you this trade's going to work out. I put a lot of money betting that, you know, on the call options that expire tomorrow, this thing's going to work out. But even if it doesn't, you know, and you put a, you know, 1% risk, and, you know, and bet 250, it's not the end of the world if you're wrong. It doesn't matter. It's not about being right or wrong, right? George Soros said it doesn't matter how many losers you have. It's what is the quality of your losers versus the quality of your winners. Like I said, I can lose 5 times, you know, lose 250 5 times, and, you know, and lose, you know, $15 cumulatively on, you know, 5 trades. And then on one trade, I'll make, you know, a ballistic amount. I'll be adding to it. And that's how you make money in the market. Not in and out, you know, every 30 seconds trying to, you know, trade this for a 50-cent move. So Joe asked, what is the risk website? I'll put that in. This is for FX trades. But to understand risk on stocks, you simply take your risk, which is $2.50, where it closed 71. So you get into 81.30. The low was 78.80. So I think that's $2.50. So that's your risk. And so let's say you have a $5,000 account and you want to risk 1%. So that's $50, right? 1% of your account equals $50. So then you divide 250 into 50 and you come out with, I think it's really bad at math. 20. So you could buy 20 shares. So let's say you bought 20 shares tomorrow of JD.com, gets going, hits you out, and you lose $50. You only lost 1% of your account. But if you do this enough times, instead of trading intraday, you wait for these high value things, you will make money over time. At least I do. Big money. And this thing will win. So all of this stuff, yes, you're always going to have, distractions and what have you. But I think what I look at is what I call the governing pattern. This is going to govern and dictate the trajectory going forward. So Joe says, if you have a $5,000 account and invest it all in one trade, why would you invest it all in one trade? So 40 shares times 80, I guess would be 3,200. So maybe that wouldn't be correct. So that doesn't seem, yeah, well, you could, so yeah, it would require an investment 40 times 80. It's 32. So you're investing 3,200 of your $5,000 account. But the thing is, you're only risking that. This is where you put your stop loss. So yes, you do have your money tied up in this. But to me, whatever you do in stocks, you're gonna, stocks are, trade now for $80, $100, $300 each. So you're gonna have your money tied up in what have you. So look, I'm not telling you how to engineer your account, I'm just sharing with you information, how to look at the markets, how to extrapolate big moves in the markets, how you decide to do that, what money management, what opportunity cost you decide is worth it or not is entirely up to you. I'm sharing with you a way to break apart the markets and take advantage of monster moves where I take out 300, 500, 800 pips on a trade. When I got involved in this dollar yen, I feel like I'm going to make, or I'm looking to make several hundred pips on this move, right? So I talked about buying dollar yen on the weekend, and you can see now this has really got another buy setup. So if you want to add to this, you have two inside day bars. You can see that these two bars are inside the range of this bar 3 days ago. So this is a coil. It's just building energy. And now the energy is likely to unleash in the direction of the trend and the patterns. So I always kind of make the analogy, of a beach ball. So picture if you put your hand on top of a beach ball and push it underwater, and you push it further, 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 and then you let your hand off. What happens? The beach ball just uncorks because it's built up this energy, right? So here's your energy. So once you understand the pattern, and the pattern comes from the weekly, and this is a breakout of an ascending triangle here. You can see that it broke out here, retested. Once it kind of broke past that high, then that was confirmed. So once you kind of understand the trend now, I will add to my positions into this trend. I put a buy stop again above today's high. And the nice thing about an inside day bar is that, or a narrow range bar, is that you know where your risk is. So whatever that high is, I put a buy stop there to get an additional thing, and put a sell stop somewhere under these lows, and that's your risk, and that's the reward that I'm looking at. So over the weekend, and in all my webinars prior, I've analyzed this pattern, which is a neutral pattern, this descending sawtooth pattern that for the last couple of years, every time it would hit a high, it was making lower highs. Every time it would, go and make another high, it would sell off. Then it would make a lower high and sell off, and make a lower high and sell off, and make a lower high and sell off, a lower high and sell off. And this time it didn't, right? So it started making higher highs. So it started breaking the cadence of this sawtooth triangle. So the first thing I always do is, when you look at this, if you just open your chart and you don't understand patterns or what have you, this just looks like it could go anywhere. So now it looks like it's up here and probably should come back down here. So what I try and do is I put a structure around the prices and then see how the market responds to within the structure. So at this juncture, I was unsure whether we were going to break back here or break out. And so all I did was, for weeks and weeks, watched how the prices danced around this resistance line. And I was very open to the fact that at any time it could break that way. But by not breaking that way, it then told me where it wanted to go. And now it's broken cadence. And now, we're in a virulent uptrend in these yen pairs. So, it looks like a lot of risk to buy it up here. But to my mind, this thing is, broken out of a multi-year pattern here and is likely to continue. And again, I would look at any pullback as an opportunity to keep buying into this thing. Same with the pound yen. I'm long pound yen. So I think all of these yen pairs have reverse cadence, but pound yen is probably the most volatile, and you're going to get the most bang for your buck. But you can't trade this thing with a 30 pip stop. This has very wide range. So this too has got an eve, an atom bottom. This is an inverted head and shoulders, double bottom. So you've got this huge base. You have the neckline all the way up here. And you broke above this neckline, retested it, and now you're breaking new highs, which effectively confirms this new high and this breakout. So close your eyes and buy it. Just like that other person might have said, look, you're at a, mighty resistance level. And, you could get, 200 pip knockback here very easily, but I would look at that as a buying opportunity. So that's on the weekly. And then, so once you understand the big picture, then I try and whittle it down and find opportunities. Yesterday, you had a bit of an inside day bar coil. You just could have put a buy stop above yesterday, and now you're breaking out into new highs. So once this thing just gets going, I don't really like to chase things. If you're not in it, this is probably something that you could close your eyes and buy. But, what I would do is I would wait for some consolidation, an inside day bar, a flush out, and a key reversal higher to find your way into this thing. But this thing is going higher. So this was just like dollar yen, where you have an uptrend. So the trend is obviously going higher. And then at some point you had this descending pattern, this descending triangle. Now, descending triangles can be reversals. So it could have done that. But by not doing that and busting out of here, it indicated that it was, this is a continuation. So it's effectively a continuation of this up move. It had a pause and now it's just continuing. So this was just a huge consolidation, and the bigger the consolidation just creates more magnitude for an ensuing move higher. And this is how I would look at any trading instrument. So I bought this stupid little stock. Some of these, some instruments are better than others. This has got a lot of liquidity. This is a, kind of under the radar stock, but, I kind of did the same thing. It doesn't really matter. I looked at this thing breaking out. It looked like it had this very sly pattern of rising lows. And, had this symmetrical triangle, and you broke out, and then there was this inside bar. You can see that yesterday, that bar was trading inside that. So basically just bought the breakout. I bought on the close, and then, I bought some more today, and I'm just looking for momentum. Stocks like this have a habit of just opening up the next day $4 higher. So I just bought the breakout of this, and again, the breakout has the same repercussions. You have this symmetrical triangle breakout, and now I'm just looking for one of these high velocity moves. I'm not looking to get married to this trade. So yeah, Joe, I do think the markets are likely to continue rallying, the stock markets. I said I shorted Goldman Sachs on the close. Now this is a complete wing and a prayer when you bet earnings. And this is still an up move. I was just kind of looking at these guys right here. So you made a new high, close on the low, made a new high, close on the low, made a new high. So all those key reversals, kind of telling me that, there's some resistance up here. So this thing closed up in here, looks scary to sell short. I sold short. And, the problem is, with these stocks, it's not really, you may get a $3, $4 move. I'm not looking for a huge move on this banking, on a finance move. So probably shouldn't have done it. I just did it sometimes just because I love to see, just get an instant result. I don't think I'm going to get too hurt. So you can see we're coiling in this pattern. And actually this thing looks like it's coiling to break out to the upside. But I just looked at all of these reversals in this thing and figured that maybe there's some resistance here. Maybe I get a $4 move and I'll just take a quick profit if that's the case tomorrow. The earnings are before the markets open tomorrow. So we'll see what happens. What else am I looking at? That's of high interest here. So QuantumScape, Snow made a new high and close on the low. Goldman Sachs and JD. So also, I'm looking at this for the short side, Roblox, RBLX. So we've had a bit of an up move here. But, and this doesn't have a whole lot of history, but the history it does have, to me, looks pretty bearish. So what I do is I look for the patterns and then wait for a day like today. where it kind of puts me back in the direction that I'm looking at. So to me, this looks like there's a double top pattern here. And then you have a double top and a head and shoulders here. So you have a bunch of these bear price patterns. Let's say the neckline is right around here. And today we had a mini key reversal in a market that, is going higher. This thing made a new high and closed on the low. Now, one bar doesn't, it's like one swim doesn't make a summer. One bar doesn't, I think I would need to see more here. I can't just see this thing going straight down against this price, but I'm kind of looking at this, again, tomorrow, if we get something that, looks something like this, and we, get another flush out or another kind of thing. So I'm just looking at RBLX to put a short position on somewhere in here. And again, it doesn't matter what the trading instrument is. It all starts with what is the direction. So this thing is, in a downtrend. Is there a guiding pattern? Here's the pattern. Is there an insurance day bar? Here's that key reversal. It's not really a big enough one. I'm looking at it right now. I wouldn't necessarily fire at that one, but that's, again, just how I look at all of the markets. So Jean is asking for a link of my book. Yeah, I could do that. I put that in there yesterday, and it's a pay what you want. So you decide how much you want to pay for it, and then I take that amount, I double it and donate it to the American Childhood Cancer Organization. So thank you for asking. And so Soon says, have you mentioned anything about earnings in your ebook? So I just look, so to me, earnings should just push the stock in the direction that's already indicated by the pattern. So you can go and look up, stocks announce earnings in the morning, in the evening. And what I try to do is look at the pattern and see if there's something that's telling me that things are going to go one way or another. And the earnings should just push it that way. So Duncan, thank you for the endorsement. Duncan says it's a great book. So thank you for that endorsement. So that's basically, we looked at the Australian dollar yesterday. I suggested buying the Australian dollar. Again, we had this key reversal, look just like the key reversal for JD. So once again, I look for a pattern, and then I look for what I call my insurance day bar, a bar that tells me how to get in sync with what the pattern is indicating. So I basically suggested to our members to put a buy stop right here. I forget exactly what the price was. And then you can see in the, the following session, the market dipped a little lower, and I'm not sitting in front of my screen, for 4 hours until, my eyes bleed, waiting for some crossover to tell me when this thing's going to turn. I basically had a pending order, and the market just went lower and then hit my order and then just went higher. And so to me, that's the lazy man's way of trading. You put your analysis in, all you do is put a pending order, a buy stop right there above the high. And where was this? So this was my email that goes out to our elite members who are on my list every day that I send out my trade. So this was the trade that I talked to you about yesterday. Australian dollar, put a buy stop 73.87. You can see it indicated on the chart there with the green arrow, with a stop loss 70 pips lower and a take profit 300 pips higher. And so I'll just look and see how this thing goes. and then, determine how to, adapt to that trade, increase the take profit, etc. So I said in my analysis, Australian dollar appears to be in the process of forming a double bottom bullish price pattern. Penetration above today's key reversal could result in a healthy move higher. So 73.87, I don't know, what did we close at today? We closed at 74.12. So nothing home to right, it's up, 25 pips. No big deal, but, could be on its way. Similarly, I had an analysis in Disney, put a buy stop in Disney with a sell stop under the low. And, Disney took off today, and then it kind of flamed out. But it's, it's kind of holding up, and Disney could be in an area where we're starting to get some support, and I would expect it to, so you can see that we had a reversal, it gapped, it closed above the gap, did close on the low of the day, but I would expect prices to continue higher out of this. What is Disney doing tonight? Disney is about 174.5, so about unchanged. So something to keep an eye on, but my risk is very low, and I probably wouldn't risk to now, under the previous days unchanged. So my risk would be almost nothing on this stock. So it's all about finding markets or anything that represents a great risk reward. It's all about finding little areas where you can understand where's the risk versus the reward. So Duncan said he's been long Disney for a while. It's in this congestion area, but if it can find a way out of here, it could power out. I have a feeling that tomorrow this thing may have another inside day bar, another coil, and another opportunity to add to it above to today's high. I would certainly buy it above today's high again and keep adding, because this thing looks like it's found a pretty good area in here. So Anthony says, how do you screen for trades? There are a million trades in the FX markets. I put in this link yesterday. This is a link called FinViz, or the day before. I'll put it in again. So this tells you all the stocks that were high flyers for the day, all the stocks that were low flyers, for lack of a better word. And then you can, the great thing is you can just kind of go through here and see the charts, visually. So sometimes I'll just go through here very quickly to see. Probably not these are already moved, but create a, so come here, you hit the screener, and now you can put NASDAQ, whatever exchange, whatever size stock you want to look at. You want to see something that has a dividend yield over 3%. So this does all of the work for you. And then I just come in here. Well, a dividend stock wouldn't be something that I'm playing on a technical basis. And then you can choose your sector. You want to look at healthcare, and you just come here, and I just cruise through all of these and see if I can see a pattern that, just kind of wakes me up, and then I can dig into the stock and, look at it in greater detail. So there's just thousands, and you can spend all of your time sorting through tens of thousands of stocks. So Graham says, any thoughts on BYND? So, my long-term thought on BYND is that it's bearish. Short-term, it's found a way to obviously find support consistent with what's going on in the market. We did close on the low of the day, though. So I'm going to be interested to see what happens here. So it's kind of bunched up on, this is probably a better chart to look at. So I think I did this earlier in the week. I look for patterns that, dominate the market, that, govern or dictate what's likely to go on for, a longer term. Now, there are all kinds of times where the market's not going according to what the pattern's indicating. But to me, the governing pattern is this huge double top head and shoulders. So it looks just like a man or woman's head and shoulder. And the neckline comes in around $113, which we did crack. So now this has confirmed this breakdown of this pattern. Yes, you know, once you get a breakdown, you get a retrenchment, a retest. But I don't think that this retest is likely to extend very far. This is simply an area where, you know, you got into an area of support and now it bounced. And, you know, despite the, you know, markets can have huge bounces, but still you got to understand what the deeper implication is and what the cadence of this is. So I would use any bounce. Now, you know, I just don't fire into key reversals. What I will wait for is a bar that starts telling me that this thing is ready to go down again. So I'll wait for this thing to exhaust itself. You know, maybe next week it, you know, just goes like that. And, you know, I'll just wait for an indication that this thing is ready to turn. But I'm always aware of the deeper implications. So the markets can always give you these counter trend moves. These, you know, I would say the market's kind of like a magician, right? It hides its intentions. So a magician doesn't just walk on stage and pull a rabbit out of the hat, right? He's always doing some distraction with you, you know, before he pulls that rabbit out. So, you know, this was the distraction before it fell. This is the distraction before I think it does that. How long this, you know, goes on for, you know, how long this distraction goes on for, I don't know. I let the market tell me. I'll wait for the market. By your definition, today's action, a key reversal. Yeah, I would characterize it as a key reversal. We've made a new high for the day, and by the end of the day, it was lower. But here's the key. You know, to me, there's kind of an aesthetic. I kind of look at how I do this visualization process, and so I say, yes, this is a key reversal. Made a new high, close on the low. Now that could be an indication of an area where this is going to start running in trouble. But here's the problem. You know, if I think about shorting this thing, you know, I say, okay, I'm going to get short here. Now I got to see the price go through all of this action. So I always say, you know, the markets kind of need to build away in order to fall, right? So this fell, and then it had to build a period, it had to build away in order to fall again. It needs to, so it fell, it built away, and then it fell. So I don't really see that prices, you know, are going to neatly, I mean, tomorrow we could have some announcement and hopefully this thing opens $20 lower. But so yes, this is an area where there is resistance, but I would wait. You know, I think that, you know, I would wait and see if you got two. Now you're building more space, and now you're gathering, you know, kind of more distance so that the thing can fall again. So yes, this does on the face of it look like a reversal, but I would just kind of hang out and wait. Whereas you can see this built some space, you know, had this up, you know, so, you know, the market builds this coil, builds this energy, pulls back in order to go back down. And so that reversal, you know, told me that, you know, this thing had built some sideways space and was ready to fall again. So to me, it's just a question that it's a bit bunched up. I can't see prices just crunch through all of that. So this is a bit complicated in here. And I would just wait, but this thing is going to go down. You know, I don't think that this is support. This is not going to be a double bottom and look like that. Yeah, so this is a reversal, and it even closed under the opening too. So I do think that this is in an area where you can start exploring shorting the stock. It just, may need a few more days of sorting out here. All right, does this, so we've spoken for 4 days now. Is this starting to percolate with some of you folks? Do you see this as a way that you can improve your trading or find a way to make money when you have not been able to, or you just feel that it's just a bunch of bollocks? And don't just tell me what I want to hear. I'd like to understand if you're understanding this, if it's resonating with you, and if it's not, what the disconnect is. So B says, yes, this was very helpful. So thanks for that, B. Anybody else? Anybody else want to come forward? So David says very helpful. Cayuta says very helpful. So Milan says it's a matter of practice, just like driving a vehicle. Antonio says it makes sense. So Milan, absolutely. Let's see. Mark says yes. The more I watch the system, the more clear it becomes. So it's sorry, it's coming in. Roland says it helps a lot to see the patterns you describe. Maybe it says, I know what you're saying. I have to learn this new type of candles. It's actually it's called a bar chart. Frederick says, yes, this opened my eyes for trading. Joe says, looking at the long-term picture is a big help. Andre says, very helpful. Dean says, can I ask your views on the QQQs, which is the proxy for the NASDAQ? So, I was saying earlier in the week that, we were in kind of the middle of the tennis court. It was dribbling down. So this is where there's a lot of nuance in the markets, right? So the market will throw you a lot of patterns. And, first off, this is, if you look at obviously the weekly chart, this is in a big, bad uptrend. So the first thing when I open up a chart, I say to myself, what is this thing doing? Is it sideways? Is it going up or is it going down? And I think if I asked a 6-year-old what this chart was doing, he would say, this is an uptrend. So every sell-off has been met by higher highs. This is the definition of an uptrend. So yes, all along the way, there were certain patterns. There was double tops here, there were head and shoulders, but then it was just followed by a move higher. So you can go look at patterns in a textbook, and I can describe what a head and shoulders and a double top is, and I can show you how I apply it, to JD and the Australian dollar. But sometimes it gets into a bit of a nuance where the market shows you patterns, and I think I discussed this yesterday, where I was looking at 5 bear patterns in this particular area. And again, I'm a trader and I'm looking for moves. So I saw this head and shoulders right here, this double top. This was an island top because you had 2 gaps here. And there was 5 bear patterns that kind of came together and told me that this was an area that was going to have a nice move lower. And when you're trading options, all you're looking for is this kind of move. And so right here, when the Qs are trading at 334, I bought the 320 put options way, way away. I bought them for $1 on a Friday. And on Tuesday, this thing went to 310. So my options that I paid $1 for went to 10. So I made between 800 and 1,000% on that move. But here's the rub. Here was a perfectly great looking head and shoulders, right? So you see this, you go and look at your textbooks and say, okay, now I'm off to the races. This thing's a green light. And yep, the market goes through and you're looking good, but then all of a sudden it doesn't start conforming. So what I do is I look at a pattern, and when I see this head and shoulders, this is what should basically transpire. And if you start getting some of this, then it's what's called a busted pattern, where the implications of this pattern are busted by the ensuing price action. So this very quickly became a busted pattern. And once I even understand that becomes then it just invites the opposite invitation where I'll just go long because that short isn't working. And here you had a perfect looking double top here. And again, you had a nice thing and you're thinking, okay, I got this market by the tail. And then just as quickly you get another pattern, the double bottom, and then it goes, but this was always an uptrend. So that you have to be, frightfully aware that when you see certain things, so here to me was a, kind of a asymmetric double top look and a head and shoulders. But now the market, is going to start busting through that and busting the implications. So for this to have been a head and shoulders, this effectively had to go through this neckline to confirm it. Right. And, even, do this morning session and we had this drip, drip, dip this week, 4 days lower. And I said, this is just, but you had, and this is what I'm saying for Beyond Meat. At some point, you have to kind of visualize how prices are going to go and, can prices crack through previous price history? So I always look for this concept of spacing. If a market's going up, then I want to see a market build away in order to go in the opposite direction. It needs to create space. It needs to create distance away from an up move. And I know this is, it's a lot of stuff, and I just see the markets very aesthetically. And either this thing is working or it's not. And so this shoulder now is being busted. The implications are being busted by today's price action, which means that if it's not going down, it's going up. And it's just that simple. So from, what looked like the double top now looks like a double bottom. And so we could bust out and it's going to be interesting to see what happens in here, because now it's got to also go through these prices too. So there's, it's just really in the middle, and that's why you get these very huge gyrations. The market's been searching for leadership and, wondering what, if inflation is going to be transitory or not, what's going on with interest rates. And so you've had this, this huge vacillation. So to me, this is very much a stock picker's market where you got to go in and look at like a JD or find your area of risk and reward. You can't just, wade into these markets. So Jean-Louis says, so far I had each one of these sessions, each one added a bit to the previous one. I'm now beginning to understand a bit more about the patterns and the importance on price directions. Each time I found it more amazing. Hopefully I'll be able to fly a bit on my own. Jonas says, good brings structured decisions and trading, considering risk and reward before placing an order based on patterns and daily charts makes it less hysteric. So to me, it's all about risk and reward. And I think the best example of that, I made a whole bunch of trades in here in QuantumScape here. So, so this is an example of a trade where I saw a pattern. I did this all the way along here, and did trades where I could identify. I sold short on that particular day right there at right like 10 cents below the high of the day. I think it was 29.72, and the thing went to 24 bucks. I literally had zero risk and made $400,000 on this thing. So QuantumScape was a great example of how on one of these webinars, I kind of went on record and said that there's no risk. And I said, I feel like this is, a crazy thing to say. It's very reckless. And it was right in this area here. So let me just back out, put this chart into perspective. So to me, this whole chart was a huge bear pattern right from the get-go. So this thing was a new SPAC IPO, soared to 140 and then crashed. And so right there, I kind of knew that this was over. This was my governing pattern all the way through all of this. So a pattern that occurred 6 months ago told me what to do in this time frame, 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 and I've just made a fortune of money in this stock from this one pattern right here, this head and shoulders. So once I understand that, it was over, all of these rallies, yeah, you can have counter trend rallies, but once you understand the governing pattern, like JD or the Australian dollar or what have you, once you understand what's underneath and directing it, then you can anticipate it. So there were a whole bunch of times where, right in here is a nice double top. And then you also have this key reversal, made a new high, closed on the low. And you also right here had an inside day bar. You can see that very narrow range day bar. So you had basically something that looked like this, close on the low, then you had that coil. And so to me, when I see this, it's just a no-brainer to put a sell stop there, let the market put you in, and look what transpired after that. And so literally I had zero risk. So, once, you had this little narrow range day bar, this was basically my risk and that was my reward. So it was like nothing. It was a 50-cent risk to make, I don't know what I made on this thing, $20. So that's an example of how to find trades where the risk is very small and the outcome is obviously much greater. And here was another time, right here where I saw a double top, and then here you actually had two reversals right here. So when I see an area that looks like a top, then the corresponding price action, when I saw these two reversals right here, with both days they close on the low like that, made a new high, close on the low. And so into the opening of the next session, kind of knowing what this thing's going to do, I just put a limit in. I forgot what it was, like 29.89 or something. And I got this within, less than 10 cents of the high. I sold short right there. And so to me, I had no risk. This was kind of my risk to the top of that key reversal, and that was my reward. And so if you can identify these risk-reward relationships, that's how you can make a ton of dough. So you can see I was up $300,000 when it was at 25 bucks. I was short 44,000 shares. I put $1.5 million in that bet. That seems crazy. Why would I put $1.5 million in a $20 stock? Because I felt like I had zero risk, zero. So, I will do these crazy, what looks like crazy bets and buy these puts and what have you. But to me, when I'm doing them, I feel like I have no risk at all. And it's all about, yes, I feel very reckless in saying there's zero risk, but I had a feeling when I shorted there, again, when I say zero, I was, looking to risk to the top of this key reversal, but I think I understand enough about markets and what they look like. And at that time, I felt I had no risk. I shorted at 29.75 and it went down 8 of the 9 trading sessions following that. So, you don't have to find one of these every day. You find a couple of these a year, you're good. And that's the difference between in and out trading and finding an area where you can identify $1 or $2 risk and take $9 out. So this is what I'm looking for, risk and reward. I don't care what the market's doing. I don't care what the Qs are doing. I don't care what J Powell's doing. I just try and find any trading instrument where I can understand a risk-reward relationship that makes sense. like JD, buy to 81.30, put your stop at 78.80. To me, that looks very reasonable given the scenario we're looking at. And if it doesn't work out, it doesn't matter. All I need is, one of these, and it overcomes many, many losers. When I make 400 grand on a trade, I can take 20 pokes at other trades. Phil says, do I have a position in gold? I do not. So Frederick says, thank you. I'm going to follow you and become an elite member. So before you leave, I'd like to ask you guys a favor. I've spent 4 days with you guys. I know that it's a pain in the ass. Everybody asks for reviews and what have you. But I would really like to ask you guys for a review. Dwight, if you want to put that in the chat box. Let me actually pull that up to show you what it looks like. And I would really appreciate it. It helps me. It helps other people to understand, what this experience is. And I want you to be truthful. You can say I had a bad experience, and please tell me why. And if you had a good experience, then I would really appreciate you telling me also. So we have a lot of people coming on our review website, just so you understand. We don't have a lot of negative reviews, and we don't filter them. It's on something called Trustpilot, so we can't filter them. So it's completely transparent. And then once in a while, you'll see a tremendously terrible review, and you have to understand that those people have a motive. They want to, slam me and then redirect you to a product that they're selling. So that's why, first off, I'd like to understand if I had any impact on you, and if you digested this thing, if I was able to explain it in a meaningful way, and then it also helps me offset these, other reviews that people have other motivations for. So I'd really appreciate it. Kim Kuhn says, thank you. Tons of precious learning, and we'll continue to look forward to better days ahead. Antonio says, what is the best application of yours, the boiler room or the elite? It's, it's really up to you what you're looking to get out of things. Sun says, would you mind adding PayPal? We have Stripe. That's what we have. And that's, a lot of people around the world, it seems to work. I don't deal with any of that stuff. So Donald says, this was great. I appreciate it. Milan says, get back to excellent support and get back to, excellent support and assurance. I got out of this. Good on you, Milan. Roland says, it would be good to see your thought process that you use to get out of trades. The link for the review site. Oh, I'm sorry. Let me put that in there. Thank you for that. So there's the link to the review website. So Jimmy says, thanks, very generous. So appreciate that, Jimmy. So I'd appreciate just you guys reciprocating a little bit and, putting something on there. And I like you to say, instead of saying this was great, just say what you got out of it and elaborate. So it gives me feedback, to understand if, I'm explaining things so much of this lives in my brain, and I don't know if I'm getting a lot of it across. Dean says, thank you. I enjoy your session. The analysis is fabulous. Thank you. John says, thanks again, John. You're always great. Joey says, I signed up for weekly emails as a start. Is Elite better at this stage? It's up to you to determine, Joe. You can sign up, whatever. So you can't just join the Elite. You can't just go to the website. If you'll get a link, I think, from our team after these webinars, I'm sure. And then somebody will speak to you. So you'll know exactly what's involved and whether this is going to be a good fit for you. So we don't just try and slam it down your throat. Coyote says, thank you. You're welcome. Yvonne, you're welcome. Graham. Thank you. Artono, you're great to see you. So, thanks everybody. Hope you had a good experience, and hopefully I will see you guys either soon or somewhere along our respective trading journeys. Joe says, you're the best trader I ever listened to. So Joe, that's very meaningful to me. I appreciate it. Soon says, the best session I've ever seen. Wow, that's fantastic. Hope we could have more sessions like this. So I do these usually once a month. So John says, thanks, Mark. I think I've learned to take positions I can afford to and watch the stop losses. So again, you can configure your risk, right? It's up to you. So people just go in with these arbitrary lot sizes and these, small stop losses and get cut up in the markets. My idea is to take a bigger, risk, if you will, parameter. But to me, risking $2.50 in JD to make $10 is an acceptable risk reward. But then you can take that $2.50 risk and configure it to something that, is a 1 or 2% risk for your account. So, so Ravik says, thank you, very informative. Thank you. With UPST, I have 150% more. Upstart, yeah. Upstart is something that I recommended at $135 and it's $370 now. Donald says, you are head and shoulders the best. So Donald, thanks. That's fantastic. Stick that in the review website. I'd like that. Sappy says, thank you, Mark. We'll join your elite. All right. Look forward to seeing all of you guys soon. Where can we get a replay of these sessions? You just send a message to support@thepatterntrader.com. Now, a lot of people are asking about gold. Gold is at an inflection point, so maybe I'll just leave it there. So gold is at a very interesting point. And just like the yen pairs that drove me crazy for a while, sometimes when I'm not sure, I just let price be the referee and tell me where price wants to go. So gold is at a very key inflection point. So these patterns that I've showed you, just like the head and shoulders in the NASDAQ, which should go one way, and then they don't, that also tells me. So this is an ascending broadening price pattern. I think we looked at this on something else the other day. An ascending broadening price pattern is where prices go up throughout the pattern. They start out life in the pattern narrow and then broaden out at the top. Hence, it's named the ascending broadening price pattern. Now, again, this is a pattern that could go one way or another. And we are at a major inflection point. And the price action, so you can see we've hit this support area a couple times. And this could be one of the best inflection points we've ever seen, or it could just roll over. I'm still, trying to decide, although when I look at these key reversals here, these kind of point in the direction that the market wants to go. And so, right now we have, a bit of a downsloping market. We have this kind of symmetrical triangle. We're about to break out of this thing. So I've been trying to figure this out. It's been in this, back and forth. I've made a ton of money actually shorting gold when the whole world was saying that gold was going to go higher. I actually started shorting it right there. Why? Because the volatility started to expand way beyond normal. You can see that those 3 bars of volatility were way above anything preceding. So I was telling our members to start getting out right at the top. And then once I saw this double top right there, and then these key reversals, and then inside bars and what have you, I was getting short on all of these things in here and made a ton of money. I predicted that it would come back down to this 1700 area, and it came to 1687. And so now we've kind of, we've come to the very mature, the business end of this thing. And so as the more we get coiled or bunched up, the higher probabilities of a huge move out of this thing. And like I said, these key reversals suggest that this thing wants to go higher, but I'm still, let me just, a little bit on the fence. So this is where when I'm on the fence, I kind of dial out into bigger time frames. The more information, the more history, we can look at things. So what I'm always trying to do is find patterns that are going to tell me where the next big move is and how to also avoid the pitfalls. So, on the daily, it looks, pretty robust. When we look at the daily, it looks like, okay, we've gone up pretty good here, and you want to chase this move. It went up today, you want to chase it. But when I look at this monthly, it's still a case of these lower highs. And we're, effectively in this kind of descending triangle or even symmetrical triangle. And we're getting bunched up. We're getting to the business end of this thing. And we're going to know one way or another very soon what this thing wants to do. But sometimes it's just worth waiting instead of chasing it when it's, in this kind of ambivalent zone, because that's how you get caught. You chase it and then it goes there. So I'm kind of just watching how this plays out. And so on the weekly, I can see the double bottoms, the price reversals on the downside. On the monthlies, I see all of these reversals on the upside. So, to me, those are what's containing this thing. But like dollar yen, that looked like it was in this kind of configuration for a long, long time. And then it started breaking out. So I think anything above, that looks about 1850, to me would really look like this thing is going to start breaking out to the upside. But we could have a false move before then. So again, this is how I kind of look at prices to determine big moves in the markets. So Sappy says, thanks, Mark. I bought Australian, US, and dollar yen, and I'm making a profit. I would like to join your elite group as soon as possible. Sappy, no worries. Glad to have you as a member, and look forward to having you as the elite. So, all right, guys, I'm going to love and leave you. Thank you for hanging out with me for 4 days. I hope you got something out of these sessions. Please let me know one way or another, and it really helps me going forward. So thank you very much. Ken says excellent sessions. Thank you. Thank you, B. Thank you. Thanks, Dwight.